Thank you all for joining this panel. It's looking at mobilizing local capital. I would like to start speaking to Tom. Tom, as someone who works at the regulator, can you give us an overview of the regulatory environment?
Talking about the regulatory framework in this country, will take us back to the year 2000 when we actually got the law. And one of the things that actually brought about that is to make sure that there was an investment guideline which made provisions on how those pension funds were going to be invested. In this particular guideline, we have 10 categories on which pension fund trustees will be required to look into for purpose of making sure that they get the right diversification as they invest pension funds. One of the things that has come out in the discussion today is the issue of understanding what really all this private equity is all about. And even most of the trustees who come forward on engaging them, we realize that they don't really have a lot of information, and I think it's something that we have as a challenge that we need to really be able to address.
What, in your view, as someone who's very familiar with the legal environment around this, are the key obstacles to invest in?
Some of the other obstacles is obviously the fact that trustees themselves may not really understand a lot about private equity, how they are structured, and the kind of governance structures that mitigate risk, which practitioners will know about, that PE firms, PE funds themselves are actually set up under certain legal environment, and that those legal environment is what protects the investors, and that the investors also in PE funds, have a say in terms of how the money is invested.
Is it a handicap to long-term sustainable investment in PE and other alternative assets? And what can be done to change that outlook?
I feel that even as we see an increase in investing in alternative investments, unless we look at how the industry is structured in Kenya, because we have close to 1,400 pension schemes in Kenya. All of these are trust-based schemes that are sponsored by employers. And of these 1,400 schemes, 1,300 have assets between 500 or less than 1 billion shillings in total. Now, the appetite for a trustee and lay trustees when they have so little money to think about investing in private equity is a challenge.
Do you see appetite from local pension funds for increased exposure to private equity?
The public markets are good. I think I've heard one or two people try to demonize the public markets. So it's not about demonizing the public markets, it's about showing how they can be complementary and work together. And for us, if you look at the long-term nature of pension funds, if you look at the sustainable capital that can be deployed into sort of growth strategies, for us that is what we felt has made quite a bit of sense. So clearly private equity is something that we prefer because all those negatives that I've mentioned can be managed to a large extent through private equity funds.
What were the key things that worked for you when it came to raising capital locally, if you can share with us? And what are your thoughts on the perceptions of private equity?
From what we went through ourselves, we think it's promising. And the other thing that works for us is we didn't go directly to the trustees. And that's what I'm saying the secret is with Ken. We didn't go directly to the trustees. We thought we needed to work with the ecosystem. So work with the managers, because you can't actually get the allocation without the blessing of the manager anyway. Even before you get to the regulator, they must give a go-ahead that they believe in you. And then work with the likes of Sandeep, who are on the other side of consulting, for them to understand who you are. Because the manager selection skills with the trustees doesn't exist. They do not know how to select the managers. We were kind enough to talk to some of them and tell them, look, we can take you to the DFI investors that we have. Then they can be able to give you a snapshot of what they look for when they select a manager. So that then that prowess or skill can then get into the trustees, and then they can get more comfortable that we are selecting the right team. The relationship between you and these trustees is also very important, that they need to know what you've done before, how you've done it. They need to have seen you around to be able to believe your story, because then you'll be able to bring yourself to their level. If you're not able to do that, it won't be very successful.
Thank you very much, the panelists. I think just to wrap up and summarize, the few things that have come out from this panel is, there needs to be further regulatory reform. This will take some time, but it needs to be done the way that the assets class of pension funds are actually structured need to be changed as well. But also there needs to be better education of the pension fund trustees themselves and also the regulator to understand that private equity is not a black box, that it is beneficial to economies, it is beneficial to the pension fund in the long run. And I think those are the key points.